Hi traders and welcome to the Friday Market Watch on the 16th of December. So we've seen some volatility return to the market at the end of the week. We started out with some pretty good data, but yeah, look, we've seen the market really reverse on that one. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. We'll start out here with the Aussie USD. And you can see we really hit that level that we expected to hit the other day, basically early in the week, but we've reversed everything from that now, and it's back to where we started, really actually a little bit lower than we were last week. We already had this level drawn up. I mean, it was a reversal zone, so no real surprise to see it here. But it just certainly came down with a really big bang. Like it hit the resistance at that 68.50 level. So hopefully you were able to take advantage of that trade. We knew we were trading up, and you can see here the 20 moving average was its push off. But hit that target, went up slightly, but then reversed relatively fast at that candle there, and then all the way back down to the roll reversal zone where, yeah, if it was going to come back, this was the level it was coming back to, which is a reasonable move, yeah, given that it did reach the 68.50 pretty comfortably. So hopefully you're able to take advantage of that, because I think the initial move was a pretty easy one, but this one may not have been as easy. If you weren't right in front of the charts, it might have been a little bit difficult. Like you've got to go to the smaller time frames really to understand exactly what did happen. But then, you know, in saying that, you can see we've had a pretty easy flow all the way down. So it wasn't like it happened in one candle. You can see that once we hit that top, it started to come down in a systematic process, lower high, lower lows, touch of the 20 moving average down, touch of the 20 moving average down. So as much as it looks really ugly on a daily chart in the sense that it would have been hard to get into, the 15-minute did actually give you that chance, but of course you have to be trading that session. So that was the contingency there. Hopefully you're able to take advantage of that, because the rules that we always follow were basically playing out to perfection on that chart. So with a little bit of luck, you got the move up, and you got some of the move down as well. Look, where to from now, it's going to really depend on whether this level actually holds up or not. It really needs to get itself up above. Look, yeah, the US market hasn't actually closed yet. We've still got a little bit of time. We could see a little bit of a reversal late in the session, but yeah, more than likely it's probably going to hover around here until the New York session again starts tonight. Even though we're in an Asian session throughout the day, after such a big move, we generally don't see a continuation. You know, it takes a pause for at least a few hours. So we're probably going to see some consolidation around here. I think early into the new week, we're either going to be, you know, a little bit lower than this, or we're going to pull up back up to the 20 moving average. So if we see a move up back to the mid 67 cent mark on Monday, then I think we can probably start targeting the highs again, and we can start to see a bit of a resurgence from this level. But if we actually close below here, and we're closing below the 67 cent mark, and that's where we're at on Monday morning, I think we might see, yeah, further weakness and potentially a move back down to that 65 cent mark. So good trading either side. I think it's just a case of, you know, really waiting for the Monday close to find out, you know, where the direction is going to be tracking. But I think both sides have a plausible move that you'd be pretty comfortable in. So let's jump into the US dollar CAD. This one bounced off the level that we were talking about last week. Look, like, as you know, like, these lines, we always draw these and keep them there. And it played out to perfection. As you can see, it hit, you know, we knew that there was resistance at this point. You can see that right through there. So, you know, all the way through there, you can see that we had resistance. It did hit it during the week. And then, of course, it did come down earlier in the week, bounced off it, yeah, just like clockwork. And now you can see that we're starting to nearly push that same level that we were at last week. So, you know, if you were shorting this level, when you know that there's resistance in front of you, it's really important to take notice of that. And this is not the place to be going long, obviously. And the minute you can see that we know we've got a very solid level to aim for, it's generally a pretty easy scalp. You can see that, you know, and it's a reasonable move too. Like, you're talking about 150 pips. So it's not like it's a really small move, but hopefully you're able to catch a bit of that, because really the likely scenario in these cases, especially when you've got 4 weeks in a row, is that it is going to weaken. It's having trouble getting through, and the most likely scenario is going to reverse to the next level of support. So it did that. Hopefully you're able to catch that move, and of course you're looking for a reversal from that point. Again, you've got to go to the smaller time frames to see that, and yeah, if you're scalping the 15 minutes, going to be a target zone. And very similar to the chart that we just saw on the Aussie, series of higher highs and higher lows on a 15-minute chart, touch of the 20 moving average off, touches the moving average and off. So pretty straightforward trading on the CAD as well. So hopefully you're able to get that move as well. I think, look, avid followers of the Friday Market Watch should have been able to have a pretty good week this week. I think we got moves on both sides that were relatively easy to obtain, or at least one of them was in one direction. US dollar yen is the next one. We'll look at the 15-minute chart first, because I mean that's the one we're probably going to go to when we look for the initial moves up. As you can see, very similar in the way it went up. Higher high, higher low, 20 moving average, and off it goes. We'll look on the bigger time frame and get the overall view. Same deal really. We were here last week. Obviously touch a 20 moving average, which is what we wanted it to do. If it was going to pull back, that's where it was going. And of course the support was touched, and realistically it's almost identical to the other one, but this one's got the 200 moving average catching it as well. So daily 200 we know is a big deal. It touched it again. What we're looking for now is either a break to the, we need it not just to break the 20 moving average though, because we do have a roll reversal zone right in front of it. You can see here that 138.80 level is right in front of it, and a bit of a problem. It's not very far away, and you could potentially scalp up to it. If you're really scalping on the smaller time frames, you could aim for that level in the first instance, but just be mindful that if it does get there, it may find a serious amount of resistance because of this top and the support that we've got here. But if indeed it breaks through and gets past the 139 again, it really opens itself back up to the 142 really, which is the next level up. Okay, so a break above this blue line here, and we're starting to look for a 142 move. If the 20 moving average holds it and it reverses back down to the support and the 200 moving average, that might be a catalyst for a break of this level. So be very, very mindful. A third touch would be pretty scary for this one. If you're going to scalp it up to this level here, or look for a reversal up to the 20 moving average where it is right now. If you see a lower high, lower low sequence on a smaller time frame, you can start aiming back down to the 135. So scalp inside this zone, but the minute we get a daily close above here or below this level here, then we can start looking for the next move and the next swing trade on this one. All right, over to the dollar index now. Dollar index has been playing the game. A lot of these charts are looking very similar. We were at this zone last week. We knew that the support was at this level at the 103.50. It came down, touched it, did all the things it needed to do, and then had that little mini reversal off. Of course, the euro is the beneficiary of this move, so we'll go into that one in a second. But in reality, the take profit's going to be the 105 if it does continue to move up from this point. We can see a pretty strong candle in today's trading. If we do continue this strength, we're probably going to more than likely find a bit more resistance at the 105. We've got a 20 moving average bearing down on us, and also a very strong roll reversal zone. So it's playing the game in terms of levels. But look, let's go to the euro and we'll really see the tradable opportunity here. Again, it did what we needed it to do. It hit the level that we were after, the 106. It hit it fairly quickly, actually. So hopefully you're able to actually take advantage of that. But it did find resistance at this point. Look, when they break through, sometimes when they do bust through an important roll reversal zone, you've got to be a little bit mindful that move is generally not sustained. Now, it has come back to this level. If it floats above this level and reverses, so now that we're back down at this level, if it finds a bit of a base here and finds a series of higher highs and higher lows on a smaller time frame, like a 1 hour or something like that, we can start to look for moves up to the next real resistance, which is going to be the 107.50. So that is definitely a possibility. Look, it did go as high as 107.35. So really, it's already got pretty easy traveling from this level here way up to there anyway. But I would be looking for a change of trend. So a series of higher highs and higher lows on a smaller time frame. No smaller than 15, but probably a 1 hour would be ideal. If we get that, that would be where I would be aiming for in the first instance, and then just let the market play out. If, of course, it breaks down below this level and we're trading in the 105.50 area again on a daily chart, then we're going to start looking for a move down to the 20 moving average. It's likely, it hasn't touched it in a while, and it is likely to get back down there if any weakness is starting to show on this pair. So realistically, a small base formation here would take us back up to the 107.50, which is what I'd be looking for. A daily break, though, below this level at around that 105.50, and then we'd be starting to target the 20 moving average move early, especially early next week, at around the 104.50 level. So good trading on the euro. Hopefully you're able to catch some of that. It did look like it was going to be weaker, and then it moved up, and now it's given back a lot of its gains from 2 days ago. So just be very careful with it, though. Remember that it has broken resistance. If it does form a base here, though, definitely a good trading opportunity if we get that roll reversal bounce from this level. All right, the last one we'll have a look at is the S&P, of course. Now, yeah, this has seen a really big sell-off tonight. You can see it's pulled up a little bit from the trading from even an hour ago, really. And we've still got a little bit of the market to stay open. We've got another hour or so of trading. But as you can see, 2.7% down. Obviously, we didn't like what we saw in the sessions trading, but in reality, I was worried when I saw this candle here. Yeah, the CPI data was good, but of course, the market treated it with an initial burst, but then it came back a lot. When you see a big candle reversal like that, like it's a pretty serious candle reversal, it gave back more than 3/4 of its gains, which always worries me. The next day was a big indecision candle because obviously the Fed notes were waiting. The market was waiting for the Fed notes to really see what they had to say about it all. And then, of course, we've seen this big giant red candle that's broken through that 3,900 level. The 3,900 level is a very important level for this one. I know it's very close to it right now. Like it's trying to get back above it. So yeah, realistically, it's going to be very important to see if it can actually get itself back up there. If we get a close above the 3,900 in tomorrow's trade, so Saturday morning our time, if we see a 3,900 or better close, it's going to bode better for next week's trading. I'd be looking for opportunities to go long next week. If we get a close above the 3,900, that is. And then we've got a pretty easy target to aim for too. We've got the 4,000 and the 4,150 right in front of us. And if the Christmas rally is going to play the game this week, that's where we're going to be. But of course, if we get a close below 3,900, and especially if it continues on and we're trading somewhere in the 3,800s, or worse, yeah, I wouldn't imagine that would happen in the one night, but anything can. It can move very quickly. If we're trading, in the low to mid 38s, it's going to bode pretty ordinary for next week's trading, and I wouldn't be that keen on jumping on the long. So I'd be going to the smaller time frames, looking for the opportunities. But 3,800, there's, like I said last week, there's a lot of puts at 3,800, so it's more than likely going to hold that level. But it is 100 points away, so there are shorting opportunities in the meantime. In tonight's trading, if it does start to trend lower again, 3,800 is going to be a target. It's a big move, but it can certainly do it. It's done 3% today, so it can do 3% again tomorrow. No problem about that. But if it does close above 3,900, then you're looking at potential opportunities to go back to 4,000. So you've got 100 points either side, and I think that makes for pretty good trading either way. It's been good to us. It's given us all the levels that we wanted to. I mean, it obviously overshot where we wanted it to stop because 3,900 was our target. That's okay. It didn't go very much past it. And again, when we're trading, we're always looking for the easiest of the trades. We want the biggest meat of the move. We don't need to have every single pip, so just keep that in mind. Hope everyone's had a great week's trading. We've had awesome opportunities. Hopefully you're able to take advantage of a lot of those. Have a great weekend, and I look forward to seeing you all next week for the last Friday Market Watch of 2022.